All right, hello everyone. Tim Davis coming to you guys with another market review. Today is June the 3rd, 2023. It's early morning hours, and I wanted to start on this update just a little early while I had a little bit of time. All right, so if you viewed my update last week, I told you that if you pay close attention to the S&P 500. It's from a technical standpoint. I'm just go over the technicals this weekend. That $4,200 level was a technical level of resistance, and we clearly broke above that level here recently. And as of the end of the trading day on Friday, we closed above that level and with a significant gap up. It's a gap in the market. I like to highlight those because majority of the time when you see gaps in the market, majority of the time, those gaps will tend to fill. So with this gap up in price action on Friday, it is very possible that we can start to see a pullback in this area here in the very, very near future. So going into the trading day next week, we start the trading week off. It would not be surprising to me to see a pullback towards that $4,200 level for a retest. Now, this $4,200 level now, it becomes support. So that could be a strong area of support for the markets in the near term. So any pullback from here, we could see a pullback back to around that $4,200 level, and then we could see, we had to wait and see what happens then. But that could turn into a strong area of support, which was once a strong area of resistance. That's what the near term looks like. So again, daily chart shows a big pop. We're starting to get into some overbought territory. Looking at the RSI. RSI starting to be overbought over that 70 level. TTM squeeze. Looks like we are having some strong momentum to the upside. So, because with all of that considering, and if we take I'm gonna take a quick glance at the VIX, but I'm gonna go with the VIX in detail. With the S&P showing a big gap up in overbought territory on this daily chart. If we take a look at other indexes too, and I'm gonna switch back to these in a second, but I want to show you guys how this has been move across the board in overbought territory. And with the S&P and the NASDAQ being the ones who are pretty much ahead of the game as far as how long it's been in this upward trend. If we take a look at the Dow Jones daily chart, we'll see that same scenario. Zoom in here. Nice gap up. Back up to an just above a level of resistance on the Dow Jones. So again, with the momentum on the Dow Jones looks a little bit stronger than the momentum on the S&P because the Dow Jones was in an oversold state at one point in May. It's like it's ready to come out of the oversold state with upper head resistance. Like we broke above a previous level of resistance right around at 33 or 33,600 level. We're above that. It's like the Dow could very much well do what some of the other indexes that did, is to try to reach the next zone or next level of resistance, which will be well above this 34,000 level. So that is a huge possibility as we head towards the end of the week next week. But I think in the beginning of the week, we could see some type of consolidation or give back because of this gap up that we seen on Friday. It was a massive gap up, placing a lot of stocks and a lot of indexes in overbought territory. So that's the daily chart of the Dow Jones. Nice gap up, so right up to a level of resistance, we could see a pullback. But I think this strong indication, the strong candle that we seen on Friday, when we see gaps like this, you need to see follow through in order for the bulls to really be in strong control. So follow through will consist of some type of pullback back to the moving average, more than likely. Then we have to see if we hold, if we do get a pullback, and then continue the next move higher, the next wave higher. So that's what we're looking forward to see if we get this fill the gap scenario and then move back higher, which is a strong possibility here in the near term. That's what the Dow Jones looks like. If you look at the NASDAQ daily chart, it is definitely an overbought territory. Broke out above this level here, which is right there around 13,250. Got above the level, pull back just a little bit, but that was a strong level of resistance, folks. And we broke out above that level, but the Nasdaq has been the one that's been really, really in swinging around overbought territory for quite a bit, and it's like we could be in store for some kind of pullback, which I don't think it would be a significant one because I think these moves to the upside has been kind of strong. So I do think we could see some type of pullback before we attempt to make a move higher. So we have to see how this pans out. We are in have seen some extreme moves to the upside, so we could start to see some type of pullback as we go into next week with a lot of these indexes in overbought territory, as you can see here by looking at the RSI and the Nasdaq, that we definitely in overbought territory according to the RSI, with an RSI reading of about 78, big time overbought territory. So if we glance at quickly glance at a weekly chart of this Nasdaq, this one has really been an outlier. So the weekly chart of the Nasdaq on the Nasdaq shows the RSI at 82. That's an extreme overbought territory, folks. So at any given point now, we can really see this Nasdaq really reverse in a major way, with the weekly chart showing in big time overbought territory. And with some of with that in mind, look at some of the stocks such as Nvidia, which is the AI craze everybody's been chasing. Look how overbought this one has been. Has an RSI of 93. That's extremely overbought. So with that said, I do expect we can start to see maybe towards the beginning of the week some pullback, especially within the Nasdaq. But because of these strong moves to the upside, I think those pullbacks will pull back to a level of resistance, so right around moving averages, and then may find a way to reverse and go back higher. We have to see how that pans out. Again, we're still in the bear market, folks, believe it or not. So these are still rallies within this bear market until we're no longer in this bear market. And again, I'm going to show you guys what the VIX is showing us again. And I will continue to pound this sound the horn that we have not seen new bull markets form with a VIX as low as it is. Normally bull markets start to, new bull markets form only when the VIX is much higher. Is the VIX even relevant nowadays? We have to wait and see how that pans out. But that's normally what the case is. You normally don't see bull markets start with a low VIX. You normally see bull markets start with an elevated VIX. All right, let's switch back to the Russell. This is the one that I say could have some legs, because if you look at the Russell is really the one that's not been as strong as the other markets. We have really been hovering around this low, hovering around this level of support of the Russell for quite some time, and it's been trying to get out of this range here for quite a bit. We got a significant move on Russell on this past week. Could this be the start of a move higher in the Russell in a significant way? That's a possibility. So this is one that I'll really be paying attention to. Again, we're still in the bear market, but we still could see some follow through with this particular move up in the Russell, which would be a positive sign in the near term. So to see how it pans out. But again, this is one I'm really be paying attention to. Looks like the Russell, if it gets above this level here, which is probably around 2000, you can see a little bit more move higher, and then we got to see what happens. But again, folks, just be very, very mindful and very careful that there's a lot of things that could upend these rallies and start to really take a move back down, because we're still in a bear market, not out of a bear market just yet. But these moves are the Russell, again, it's been hovering around the support level for quite a bit. So would not surprise me to see it finally get a bounce from these levels. That's what the weekly chart looks like on the Russell. Let's look at a daily chart on the Russell. Look at that strong gap move up on Friday. So huge gap up again. 9 times out of 10, when we see these gaps in price action, only gaps do you find a way to fill. And it broke above some of these areas of resistance here. Took out that one there. So I would not be surprised. This is a strong green, solid green candle. It's one of the strongest ones this year. That's normally a sign of a lot of bullish activity that the bulls are forcing this price action higher. But with this gap up, would not be surprised when you see a pullback towards that gap before we see any continuation higher. Now, in order for this to be more than just not a head fake, we want to see some follow through. So what I'm looking for next week with these strong moves is in order for the bulls to really take control and push the market even a little bit higher than what it is, we have to start to see follow through in this price action. So if we do pull back, we need to see a follow through afterwards with price action continue to go higher. So at the beginning of the week, we could see this type of pullback to fill these gaps. But then if we do, what we're looking for is a follow through. If we don't follow through and start to break down, then the bears could be back in the driver's seat. So next week is going to be very, very interesting to see how this pans out. All right. So again, that Russell is really what got me, is that it really broke above this levels of resistance that it's been trying to get above for a very, very long time, and it finally broke above it. So looking for a follow through. We could see a pullback in the beginning, and then to see if we get any follow through afterwards. Now, look at the VIX real quick, because the VIX also did something very, very interesting. The VIX was hovering around that $17 level for quite a bit, where it was showing some support right around this, right around here. It was showing some support right around here, which is right just above between 16 and 17. And look, we broke right below that level and hit a new target right around just below 15. Folks, if I was to draw your attention back, it's a little bit back a few years. This is the lowest the VIX has been since around 2020. So here is the weekly chart of the VIX. And we're now seeing lows below lows we've seen in 2021. So 2021, we got just around here, which is right around 15. We are just below that level now. Just a little bit below that level, really testing this level of support just around 15 with a strong red candle, folks. Strong red candle. These lows are testing the lows of 2020 on the VIX. So if we draw this out, 2020, we can see where we are starting to test. VIX is starting to test those lows of 2020. And what happened in 2020 when we started to see, these lows? Eventually, the VIX broke out to the upside. So we have to wait and see what happens. Do we continue to see a VIX go lower? If you look at the RSI, it's signaling that as a possibility. When we saw this VIX pop in 2020, the VIX had already started. Well, the oscillators had already started to rise prior to February 2020, signaling a possible move. Oscillators in the RSI right now have not. It went up and it came right back down. So we had to pay close attention to this. We had extreme oversold levels on the VIX. Extreme low levels, not oversold, because we're really not oversold just yet, but we had extreme low levels on the VIX on the weekly chart. If you look at a daily chart of the VIX, in a daily chart of the VIX, we are starting to touch oversold territory. And if we look at a even closer look at the VIX by looking at a 4-hour chart, 4-hour chart shows us in oversold territory. Now, last time we got to the oversold territory this deep on a 4-hour chart, which is back in April, we're seeing a little gap up. So what I do expect is that since we had so much movement on Friday, this VIX oversold, I do expect that we will see some type of gap up from this point. Now that gap up, if we do see a rally or move up in the VIX in the near term, I do think it will probably be, you know, short-lived. Only because this move up in the market is just so strong. So we had to see what happens with this, at the beginning of the week. If we get move back up to these levels of resistance in the VIX, we got to see how it acts when it reaches this 20-period moving average. We could get a gap up in the VIX because we got a gap down in the VIX, so we could see that move back up. Then we have to wait and see how high it goes. If we continue to go higher and reach back up to around this 2020 level, then that, I mean around this $20 level, then that could be detrimental for our markets. But it looks like the VIX has dropped to a new lower low in the near term, and this level here now is going to act as a level of resistance. So we could see a move up in the VIX in the beginning of the week, and then we have to see if it gets to this level of resistance and gets rejected. If it does, then that's going to be a positive for the overall markets. But in the near term, I do think we're going to see a rise in the VIX and a pullback in the markets. We have to see which one wins. Do we get a continuation, or does the VIX stop when it wants to start reaching some of these levels of resistance right around 17? So that's what we have to look forward to in the near term. Again, we have a very, very extremely low VIX after this past week. I do expect the VIX is going to get some type of rise here after hitting some extreme oversold levels. And that's looking at some levels in the S&P and the NASDAQ, which are at overbought levels in the near term. Here's a 4-hour chart of the S&P currently in overbought territory. So again, I do expect some type of pullback here in the beginning. Then we got to see if that $4,200 level holds, and then we get another move back up towards that $4,300 level, which I think is the next level of resistance for the S&P. So we draw that out just a bit. Let's look at it. Okay, here we go. So here is the next level of resistance for the S&P. Right in that $4,300 level. Again, I told you guys last week that once we get into this zone above 4,200, the VIX really wants to test this between 42 and 43, VIX wants to test that level. And if we hit that 4,300, we got to see what happens. Could we get a strong reversal? We have to wait and see. We're still in the bear market, so nothing would surprise me at this point. Now, let me draw your attention right back to this SPX 200R, which is a sentiment tool. Told you guys another way to see or track what we could see while we're traveling. Maneuvering in this bear market. This tool also shows. I highlighted this zone a while ago. I told you guys that we are in this big zone here, which has been a area of pretty much consolidation from one extreme to the next. The highest we've gotten to this zone was around 76. The highest percent you can get is 100% of stocks trading above their 200-day moving average. Right now, we're selling in right around about 50%. So it's about 50-50. 50% of stocks above their 200-day, 50% below it. But there was a strong move up on Friday, which is signaling that this could be ready to go higher, but it's still within its zone. So we still could see, overall stocks start to climb out of some overbought territory. Some stocks are in oversold territory, and some are still ready to get a bounce from here. Some are in overbought territory, which I think that it's going to be a stock pickers market, folks, for a while, because we're still in this Long drawn out consolidation phase, folks. We are still in the bear market, but it's still a lot of volatility, and we're still in this strong area of consolidation. So with this strong candle here on this sentiment tool, this tells me that the bulls want to push price action higher in the near term. So we could see a move away from this 50% level, back up to at least here, which is around 60%. That's the next level of resistance with this tool. Then if we break above that level, we could see a move back up towards a 76, which is the ultimate strong level of resistance where we could see, some give back. So we have to see what happens. I think in the near term, again, we'll start to see the overall sentiment try to change to a positive. That's a possibility. But again, anything can change at the drop of a hat. Again, we're still not in the any bull market. So I think we are trading some bullish signals within this bear market. The oscillators on RSI are extremely strong. See, once we got above this mid level of the RSI, which is around 50, that's a bullish signal. So we got above this mid level here, and we close above it. That is a strong bullish signal for overall sentiment of the market. But again, there's a gap up here. So in the near term, it could be a hit. It could fool a lot of investors. We got that big gap up. So could we see a pullback start the beginning of the week? Yeah, definitely could. But the overall momentum is looking positive for stocks in the near term. So we could get a pullback and then come back up to test this 50% level. If we break above this 50% level, then we can start to see a continuation of rally of stocks. But not before we see some type of retest of this gap area. Then if that retest, if we do get a pull back towards the gap area, we hold, then we can see it moving back in stock. I mean, moving back up with a possible chance to break above this 50% level, which is definitely be positive for stocks. But if we get a pullback and we cannot hold this level, then we are probably going to start to retest these lows. But it looks like definitely looks like we have a strong possibility to see a continuation in the near term, because it looks like this area at the bottom of this range seems to have held. So could we be headed back towards the middle of this range? That's a possibility. Then if we do break above where we are now and head back up towards the middle of this range, where do we go from here? We have to wait and see. But we are still in a large range, folks. So we about consolidation, longer term consolidation within this bear market. So, all right, hopefully that is something that you can use that can help you. Again, just be wise and just be mindful that at any point the bear market could really take full control of this market. But right now we are definitely in a trading range. Let's look at one more thing before I go for the day. And that is the dollar. Strong dollar is not positive for markets. Keep that in mind. It looks like the dollar tried its best to break out above this 105. Look at it's starting to turn back down as well. So dollar got this nice creep up. And look, it's starting to turn back downward. So that would be positive for the overall markets in the near term. But where does the dollar find support? And that could be right around this area, folks, right where we broke out at. So right around, just above, just below, right around between 102 to 103 is going to end up being a level of support for the dollar, between 102 to 103. And if the dollar does pull back to the level and then bounce, then we know that the overall market could probably start to have some reversal as well. So again, everything shows, that we are still in a bear market. We're still in a trading range. So until, we break out of this, it's a wide range. So there's a lot of opportunity in here for the bulls and the bears, and just play your cards wisely. All right. All right, folks, all I have for you guys for right now. Let's see how the markets open up next week, and then I may be back a little early in the week to see what the markets show us early. And enjoy the rest of your weekend, folks.